Hello, beautiful blockchain people. Today, let's have a look at the price chart of the Forex or currency pair euro dollar. So let's make a small exception. Usually we analyze cryptocurrencies on a regular basis, but today let's analyze the price chart of euro dollar. That is currently trading at the level of 1.0660. So this is the monthly chart. To be honest, probably once or twice a quarter, sometimes I analyze the price chart of euro dollar. So to some extent, we know some of the ups and downs here in the different time frames. But let me remind you that I usually start with the monthly time frame. So this is the monthly chart. This is what we have. This is what we have since 2007 or since 2008, a sequence of lower highs and lower lows to some extent. So this is since the beginning of the global financial crisis in 2007, 8, 9. So let's switch to a linear chart. And it's obvious that we have a sequence in the monthly chart of lower highs and lower lows to some extent. Of course, probably this high here is at the level of the previous one, so we have something like double top. That's why I say something similar to a sequence of lower highs. Also, it's obvious that the recent lows that formed since 2015, they have been, let's say, at the same level, and now the price is testing these two local lows. But it's obvious that we have this bearish pressure. And now let's get to the candlestick chart. Okay, since the last local high or since the double top, there has been mainly a sequence of bearish candlesticks with descending maximums and descending minimums. Also, I want to highlight that when the decline started, we had a bearish engulfing. So the bearish candlestick covered with its body the bullish candlestick. So it took place in the first half or close to the summer of the previous year. And now this is the candlestick for April. It is a solid bearish candlestick with a local high below the previous ones and a local low significantly below the previous ones. So the months we have, let's say, this week till the end of the month, so 3.5 more days, but it seems that we will receive this bearish candlestick, monthly candlestick, for the month of April. So it will confirm the continuation of the bearish pressure. And once again, if we switch to a linear chart, yes, the price was able, or the bears were able to overcome this support, and now they're attacking or testing the level of the previous local low or this support. And of course, at some point of time, we may see some rebound, but definitely I would say that we have a sequence of lower highs and to some extent lower lows, so something like this. So definitely it seems that the bearish pressure is resuming from the upper line of this descending channel or downtrend. Next, let's have a look at the weekly chart. So this is the weekly chart. So once again, we see this double top. Actually, it's obvious that here this top is below the previous one. That's why I used to say in the monthly chart we have a sequence of lower highs. Moreover, if we inspect the last local high, it seems that there were two tops, this one plus this one, so that was also a double top. And if we switch to a candlestick chart, this is how it looks like, this double top. And I want to highlight that it seems that the bears are now trying to overcome the support coming from this local low, and actually this is, let's say, some kind of potential support range. So I base this support range on this local low and on this local low, but definitely, yes, we may see some kind of rebound, but after this declining local highs and this double top and this bearish pressure here. So we have a sequence here of mainly bearish candlesticks also in the weekly chart with lower highs and lower lows. So it seems that the bears will try to attack and overcome this local low as well. So we have to be definitely very careful. Actually, I mean the bulls have to be really very careful, because it seems that the bearish pressure is resuming according to the weekly chart as well. Now let's have a look at the daily chart. This is the daily chart. We have three moving averages. Let's start step by step. The first one is the 20-day moving average, or for the period of 1 month, and it seems that it is heading downwards. The price is below this moving average, so we have a bearish signal. Also, this is how the double top looks like. So the moving average here was not able to surpass this one, so it formed a second high, let's say at the level of the previous one or slightly below, and since then the price has been declining. So now we have this declining 20-day or 1 month moving average. If we add the 60-day moving average, or for the period of 1 quarter or 3 months, it's obvious that this moving average is heading downwards as well. Also, the price is below these two moving averages. The 20-day moving average is below the 60 days moving average, so we have a bearish trend. It's different to if we compare that part of the chart with this part of the chart, where the 20-day moving average was above the 60 days moving average, and of course the price was above both moving averages. And if we add the 200-day moving average, or for the period of 9 months or 3 quarters, it's obvious that this moving average is above both of the others, or both of the other moving averages, and significantly above the price as well. So definitely we have a confirmation of this bearish sentiment or bearish signal. I will change my mind only if I see the price above this 2 or 3 moving averages, and of course it will be better if we have a bullish distribution of the moving averages, when at the top is the 20-day moving average, in the middle is the 60 days moving average, and at the bottom is the 1 year is actually the 3/4 or 200 days 200-day moving average. At the moment we're below these 3 moving averages, and we even have this bearish distribution of the moving averages. At the top is the 20-day the 200-day moving average, then is the 90-day, or actually 60 days moving average. I use these numbers 1 year, 90 days if we talk about the cryptocurrency market, but this is a currency market but I'm used to. And this is the 1 month moving average. So 3/4 moving average, 1 quarter moving average, and 1 year and 1 month, and the price is below. So this is a bearish signal. We have to be really very cautious. And let's have a look at the 4-hour chart. This is the 4-hour chart. This is actually the double top. Since then, there has been a sequence of lower highs and lower lows, or something like a descending wedge or descending channel. We can play a little bit with the trajectory of this downtrend. Of course, as I highlighted last time, at any point of time, we may see some kind of rebound from the lower line of this channel, descending channel or downtrend, but trying to catch a falling knife is really very dangerous trading strategy, so I will definitely not apply it. And it's obvious that probably within this descending channel, it's better to wait for a rebound, and if a local high forms below the previous one, since and still within this channel, and we see a renewal of the price decline, then we will see a sell signal. So this will be an opportunity to open a short position. So that's it for today, fellas. It's obvious that in most of the major time frames we have this bearish sentiment. This is what I see in the price chart of euro-dollar. Thank you for watching this video. Please share your point of view as a comment below. Of course, I wish you a very wonderful day. Good luck in the financial markets, and I hope to see you in the next one. Thank you for watching.